China's gold market is thriving, while American gold continues to face pressure. Let's see when and where this battle will conclude. Let's get started. Yes, as you know, we discuss precious metals such as gold and silver here every week, followed by an evaluation of the commodity markets. Periodically, we also closely monitor the euro to dollar exchange rates and currencies, providing you with important updates. Gold and silver are crucial as they are the world's oldest forms of currency. Therefore, we provide you with price levels every week, even during weeks when not much changes. Just like last week, these levels are meant to assist short-term traders in reducing their costs. I personally always hold some physical gold and silver in my portfolio to hedge against inflation. Beyond that, I also make occasional small trades on the screen for entry and exit purposes. I record these videos every weekend when I provide you with these levels, which I hope help you manage your costs. Moreover, it seems that there are like-minded individuals in China. The Shanghai Gold Exchange in China has reached a historical record, with prices staying $120 above those in Western markets. You can see this on the chart as well. This significant premium can be attributed to various reasons. China is attempting to emerge from a severe crisis by engaging in rapid monetary expansion, which has led to increased demand for gold and silver in China. There are also numerous reports indicating that vaults in China are running low on gold and silver. Therefore, we closely monitor such news, and this physical demand naturally drives prices upwards. However, these kinds of imbalances are not permanent in the world. They will eventually find equilibrium. But where that balance will be struck, whether at higher or lower levels, is a separate matter. China will likely continue its monetary expansion, resulting in excess liquidity. However, demand for gold and silver continues to rise in other parts of the world. This could trigger certain effects. We will keep a close eye on this, but there is a high probability that this arbitrage situation is temporary. Nevertheless, it's worth noting that the West has diverged significantly from BRICS countries, where the shift towards gold and silver investments is also evident. Many individuals in the United States and Europe, just like me and many of our viewers, invest in gold and silver. Therefore, we know that conscious investors always include some gold and silver in their portfolios. In an environment where so much unlimited money is being printed worldwide, this is essential to hedge against inflation. This imbalance between gold and silver is temporary. I have been publishing videos periodically for months, showing that gold and silver prices have almost reached zero during New York hours, dropping to as low as 0.15 to 0.20 cents. But outside of American trading hours, prices have remained above $200. I've emphasized this multiple times. There's manipulative pressure here while, on the other side, there are real buyers, whether physical or on-screen, continuously buying. However, from the moment of London market opening, there is a certain tone, but it intensifies significantly after the opening of the American market. As you know, this pressure is occasionally penalized in the United States as well. Just last Friday, a former J.P. Morgan gold trader was sentenced to 6 months in prison for manipulating gold prices. While putting one or two individuals in prison is not going to stop manipulations worth billions or trillions of dollars, it's still a step. In the end, this battle over gold and silver will find a higher balance somewhere. We are closely monitoring it and trying to capture when it will happen with the help of charts. Speaking of charts, for those who closely followed the levels I provided last week, gold was quite clear. It tested the 1930s and came down to $1,900, an important level. Throughout the week, it hovered around the 200-day moving average, roughly around $1,910. It was actually a good week for short-term traders, but there wasn't much action for medium-term trades. This was expected though. The same scenarios apply this week. $1,900 remains crucial, and as long as it stays above this level, we may continue within this range. However, if it strays from the 200-day moving average, we could approach $1,900 again. The real triggers are daily closes around 1931 and weekly closes above 1948, which could initiate a significant movement. We'll closely monitor these developments. In silver, as you know, there has been pressure for the past 2.5 weeks, with prices reaching as low as $22.30 and bouncing off the trend support at that level. $22 is an important horizontal support level, and I'm always looking to buy below it. This week, I'm considering making more physical silver purchases as part of my portfolio diversification due to the attractive prices. I'll be closely watching this and might add more positions if silver continues to linger at these levels. We've reached $23, with rapid movement toward $23.30, where we have a significant level. Movements above $25.75 will signify a major move, and $23.70 is a weekly resistance level. If we see daily closes above $23.30 or weekly closes above $23.70, a significant movement could begin. As long as it stays below these levels, the pressure may persist. My trend following levels for silver are $22 and $22.30 below. Gold-silver ratio plays a significant role, and major movements in this ratio can trigger various effects. However, we haven't seen any major shifts in this ratio recently. In the short term, we're looking at 82.20, and for a significant shift, we'll need daily closings below 78. Keep in mind that we are currently in a period of relative calm. Wheat finally had a positive week after a weak start and continued to rise steadily throughout the week, producing a buy signal. This is a rare event for wheat, and we're now above $579, which I believe signals the beginning of an upward trend. Wheat has remained relatively cheap given the current economic context. There is a high likelihood that we've formed a bottom in the medium to long term, but for short-term players, $579 is our trend-following level. Cocoa, as I've mentioned from time to time, cocoa has broken out of a triangle formation with a target around $5,200 in the medium term. It's been an excellent commodity trade example. Cocoa was consolidating within that triangle for months, and commodity trades work like this. You either patiently wait for months for a breakout, or you lose patience and jump into the game, but in either case, you need to follow everything. For instance, if you've bought wheat at these lower levels and it starts rising, you might wonder why I'm emphasizing cocoa over other commodities. The point is that while wheat is still cheap, cocoa's breakout is more imminent. We are still in the game here, but we haven't increased our positions yet because we haven't seen the full potential. You know, patience is key in this environment. Uranium, speaking of which, uranium has shown a similar pattern on its daily chart, forming a tight triangle before making a strong move upward. We're currently above $45, and if we can close the week above $44, it would be a strong signal. My trend following level for uranium is $42.95, and if we close below $42.91, we might see a consolidation or a flag formation. Therefore, we'll be vigilant. As long as the direction remains upward, we have medium-term targets at $60, $70, and ultimately $77.77. Brent crude oil. After months of consolidation, Brent crude oil has broken out, signaling the start of a formation. We discussed how the break occurred above $88, initiating the formation. A typical saucer formation has developed, and we reached $95, with current prices in the $94 range. My trend following level is $91.56. As long as it remains above this level, the upward direction appears to be intact. Natural gas, it continues to move sideways, and the pressure remains. It could close around $2.63, and if it maintains that level, we might see more sideways movement. There is a trend line at $2.54 below, and if it closes below $2.63, I'll keep an eye on it towards $2.50. However, if it lingers a bit more below $2.63, we might expect a breakout movement. It could dip one more time or lift off directly from here. We'll closely monitor it, but for now, natural gas is a product we follow and trade on the upper side. However, we haven't increased our positions yet because we haven't seen the full yield. You know, we were within the triangle for uranium for weeks, then we made some moves, so there's a possibility to carry some of the product here through ETFs. But you should be careful when trading it within a frame. Pullbacks don't necessarily lead to losses if you're patient, but for large positions and within a frame, the right atmosphere hasn't quite formed yet. You need to be cautious. Regarding natural gas, I usually don't trade it to the downside during breakouts. Typically, I look for opportunities on the buying side during pullbacks. We've been following this product since it was at $10, and initially, we talked about it moving down. Then, when it went below $3, I started emphasizing the upward potential because I believe natural gas has room to go down further in this environment. It can be seen as an opportunity, especially considering alternative products such as oil, uranium, and nuclear energy raw materials. In an environment where these are going up, natural gas will eventually follow suit. If it's suppressed, I'll consider it as a buying opportunity once again. Yes, I'm trying to evaluate different products in my videos and share my broad perspective with you. Because, as you know, everyone is talking about the same things, like if the 10-year interest rates go up, gold goes down, or if this happens, that will occur. None of these are entirely correct. When 10-year interest rates rise, gold doesn't necessarily go down. At worst, gold often remains at the same levels. So, the correlation isn't being correctly explained. In this channel, I aim to clarify these misconceptions. Short-term correlations can sometimes work in the opposite direction, but long-term correlations are more important. So, there's a significant issue in the US, and as long as it remains the world's reserve currency, there isn't much likelihood of precious metals significantly dropping. There may be some breaks and disruptions related to the reserve currency issue. When these breaks happen, there will be significant movements in gold and silver. Until then, we will continue to follow and trade commodities, but overtaking commodities is going to be challenging while they are trying to withdraw so much money. Especially with a major economic crisis accompanying it, they might be able to suppress prices to some extent during that time. Different scenarios exist, so the main reason I make videos about various products periodically is to deal with this dynamic environment and to warn you along the way. Finally, there was a breakout in Euro-USD this week, and I shouldn't skip mentioning it. The breakout in Euro-USD was to the downside. As you know, in the past weeks, I've mentioned that as long as it stays below 1.08, I expected the downward pressure to continue, and I've been waiting for it to go below 1. But holding around these levels, in my opinion, offers some chance and a trading opportunity. When it rises, if you trade the selling path, you've actually been seeing it go down for quite a few weeks. Those closely following the trend know it well. Now, my short-term tracking level is 1.0770. As long as it stays below this level, the pressure will continue downwards. However, the recent hours here have shown a bit of a bearish flag formation, and perhaps some rebounds could come from these levels. Later on, if there's another breakout, I might expect movements towards new lows. You need to be cautious, but if we see closures above 1.0770 or even 1.080, we may consider the possibility of a short to medium-term bottom forming. Of course, we might be wrong, and we'll assess that possibility if it happens. But for now, I'm looking at trading the short direction during the uptrends. I close my positions as we go down in rebounds and open shorts again at the slightest bounce. So, this is how I'm currently trading Euro-USD. I wish you all a very cautious, profitable, and fantastic week.